Welcome to TradeNBI.com. This is John. This report is for the 7th of December, a day that will live in infamy. Probably not something relevant to most traders these days, but it's always worth understanding the historical context of things. Here we are, right back to that 46.13. So again, right off there, found support. Once we got above that 61%, it was pretty much kind of choppy. I mean, as though it looks clean for a finish, it was still back and forth. And what we were talking about was magenta needing to get above that white, and critically did so. At the same time, steel crossing above fading orange. Now, orange still needs to make that eclipse either below red or green, and or as I like to say, get down towards this negative 7.5 range. Usually creates a boost. So it's not out of the woods yet, because if it pivots back up in here, we could just continue to see more sideways, because a continuation move is when orange here gets caught between red and cyan, and just kind of like bounces back and forth without actually crossing. That would be a continuation move. Sort of like what we saw here. Even though the steel had crossed above a couple of times, we still ended up with a continuation until we ended up with the dip. And that gave a jump there, and then we ended up with another period where it was kind of in between until it dipped below, and that's what led to the eventual pop that lasted all the way through November. And as we move into the other markets, the YM here made a giant move back above that 34.8 range, and well above 50, and again, this is what we talked about from an institutional standpoint. When they get towards that 50%, slight carry through, and once it gets back above that, just attracts a lot of attention, and that just continued to propel price. Of course, the Nasdaq reaching right at its 50% mark and bouncing off that, and we knew that the Nasdaq was a little bit stronger overall, even though the reading here is still weaker than the S&P, interestingly enough. So there could be some more back and forth related to this. Again, this is the euro. We're not expecting much, if anything, from the euro. No shock there. And gold, skew on my charts here. That way you can see GLD up at the corner. And still flat. No change whatsoever. And this is part of that gentle rotation that we're seeing as cryptocurrencies have been the drain on the market dip, and money comes out of there to move to other places where they're going to have yield. And this is where we always look at treasuries as well as oil and that, because those become catalysts for those kinds of change. Here's the fall off from Bitcoin. So from that previous resistance, 57,000, which was the previous daily algo level that we talked about, we had suggested 51 was the next daily primary target, and sure enough, we came literally right to it at 51.585, and bounced off of it for a little bit, but then as soon as the open came for the end of the weekend, we could see it trading below that anyway. The secondary one and the full fill was 48,000, and right there. So how much more beautiful can you get than that? I don't know. Spot on, and of course that's attracted some pushback back above the 50, but a significant overall decline, really causing a lot of attention. There was a lot of liquidation of accounts on margin, that kind of thing, and that's exactly what you get when your indicators don't give you the kind of signaling that we've been seeing, which was pretty much weakness all across the board for that. From a 50K standpoint, of course, color turned earlier, and SP NBI capturing it a little bit later, closing out on the turn there. What was that? It was from 76 to 90. It's not bad, but could have been more. So working on that one to adjust some of those entries to match our paint bar setups, just so that we get maximum value out of those. This is end of day. Let's go back a little bit to the start of it, and again, it's good when we can go more than a couple of screens. We just had a lot of back and forth. So we started off earlier with pops. Every time they were on positive extremes like this, they filled back in, created the next scenario, did the same thing, filled back in, created the next bump, and filled back in. And that was just pretty much the way it happened. Once we got to these elevated areas here, it became much less range on the downside. And, when you look at that 50K and you see how strong that was, it's like, yeah, okay, you can see it for 50K. So trying to fight some of the short setups for much more than just either move to the 50% or just to fill in some of those positive extremes usually is asking a little bit much. I marked this one with a down arrow simply because you had the white spike here, and what we've talked about before is when there's a divergence to the upside from this white spike, you can be assured that price is still going to come back to where that peak is from a close standpoint. So the divergence from where was that 87.25 took us all the way up to high range up here being 100% at 46.11. So quite a move from 87 to 11. Pretty decent. And then we started to get first inclinations of a sell, but we're going to follow through with the white crossing above red, and then the reverse here of that spider, because cyan and that faded back under green. And then it wasn't until a little bit later that they met again. Still just a little early because no crossover, and then also started to fade a little bit more here. Now you dip below the 25 with the magenta, and had peaked above 10 on the white MBI, but still wasn't quite crossing, but still reasonable. And literally it's a couple bars later, relatively the same spot. So this one closes at 46.05 versus 05.75, so right in that same range. Just a question of how patient you are waiting for the actual cross. I like to do that, especially if I'm adding in, I'll wait for the cross just so you're not just constantly buying or adding to a short setup. And what did that do? It started to break down. Red started leading. You knew that it wasn't going to go anywhere from that, and the brief pop back produced the white MBI above. And where did we end up here with some of these lows? 86, 88, 87.25. 87.25 just happened to be that spike of white above the 40. So just so you can see how that, from a profit perspective and a expectation standpoint, it just gives you a clear target. Now, of course, you could take it anywhere in between 50% or whatever. I'm just pointing out, though, the reliability of it is there, and it's just a function of allowing these things to develop. And sometimes they are divergent for a little while, but overall they tend to mean revert right back to the expectation, and that's exactly what this did. So I just thought I'd point it out. Obviously, plenty of other. Well, it's a long side, excellent to take from that standpoint, but exiting a little higher and working the pin bar adjustment to match that better so that it will reflect it, and it'll be perfect. So very excited about how that's going to develop. As always, though, you can look for me on Skype chat. I'll be in and out, have some people visiting out of town, but we'll still keep at it. As always, trade well. Talk to you later.